Hey, this is Robert Oakley with your Home Source team at Home Smart Realty Group, here with Wendi from Equitable Title.
Hi.
And want to introduce you to our team and to all of our clients and customers, friends, family, people who have questions about the title side of real estate. You're a pivotal part of the whole process. I mean, people don't see you because you're behind the scenes, and I think obviously it's important that they know who our team is, who's calling, who they're talking to via email. So I wanted to introduce you, and I've been in the industry for a long time, had a couple during the downfalls, a couple times where I left, I went back in the corporate world, but you've been in the industry for 27 years? Is that
Almost.
right, or more?
Almost
Okay.
26 years.
So you started when you were 5?
Yeah.
And
I like to say that.
You were very advanced for your age.
Mm-hmm.
So, and I started when I had hair, so I can relate. We're in good shape there. But I did want to just kind of tell people what you do, how you make the whole thing come together, because people may not realize all the components, all the moving pieces. They just think, oh, I sold my house and that was it. They don't realize what's going on behind the scenes, the late hours, the stress.
Oh yeah.
The bottles of wine or whatever your favorite beverage might be. So kind of share with my clients and friends what it is you do and how you make everything happen.
All right. So first off, I'm one of the founding partners of Equitable Title here in Colorado. We are an affiliate partner with HomeSmart, and I have been in the title business for 26 years. So there's different components of the title business. There is escrow and there is title. So the title function is when you get an actual title policy that protects you as a consumer when you buy a home against any flaws of title, people asserting ownership to your property, or boundary discrepancies, things like that. Then we have the escrow portion, which is where we're the impartial third party, and we handle and facilitate between the buyer, the seller, the listing broker, the selling broker, and the lender, and we put the transaction together. We ideally close, everybody celebrates, and we exchange keys, and then you are a new homeowner. And then after the closing, we give you the title policy. So that's how the two pieces fit together with our company and what we do for the consumer.
Okay. So there's a couple of things. We were actually in a marketing class, which you were leading earlier, all the marketing tools you do. So there's things beyond title that you do. But there's a couple conversations I overheard, not that I was eavesdropping, but that I thought maybe would bring out. One of them you mentioned as you're talking to one of our other brokers was that when you send out the title disclosures and all the loopholes and problems that might be associated with it. What doesn't happen often when people get the title information from you?
Well, a couple of things that people don't do is they get a big piece of paper and they go, what do I do with this? And then they just hit delete. And there are some very important things that come out with your title commitment. So your title commitment is the title company's way of telling you what needs to occur before you actually close on a transaction, and then we actually issue a policy. So title insurance is where we insure against the past and not the future. So we're insuring against anything potentially that the seller before you, the seller before them, and all the way back to patent, something that might have occurred. So it's vitally important that you actually read that document, because some of the things that are included in there are the covenants, conditions, and restrictions for the neighborhood that you live in. So for example, if you can't paint your house purple or have a 6-foot fence, you want to read that and you want to know that before you actually go under contract or stay under contract on a house. Part of your real estate professional advice to you when you have a contract date deadline, you also have an out for the contract if you have a title objection. So that's why it's vitally important for you to read your title commitment. Some other things that can be in there are exceptions of coverage where the title company isn't going to cover you on something with the title policy, so you also have to be aware of those. The other thing is sometimes the seller isn't ready to sell their house. Meaning maybe somebody has been deceased and they haven't cleared the estate. There could be heirs that could assert rights to that estate. Those are things that the title company is taking care of prior to closing, or for example, taking care of a past foreclosure, unreleased liens, all kinds of things. So it's really important for you to look at that document.
I get it. What's the normal method of delivery? Email?
Yes.
Everything's pretty much electronic.
Yep.
Now, there's still people that don't like that. But so when you get it, I get the email link and you click on it and it becomes foreign language.
Yes.
And even though I see it, I look at it, and I don't always know what the hot spots are. But so for a seller or buyer, what if they had questions? Can they reach out to you or your team?
Absolutely.
So there is a lot there, and it is pivotal. We had one just recently where there was a property that had been in a family. It wasn't transferred 2 or 3 transactions before that properly. So there was a lot of things that at the last minute were a nightmare to resolve. So but you're right, and I overheard you say most realtors, most sellers, most buyers, they just get the email, they assume everything's right.
Yes.
And they really have to be looking at that to make sure that you're ensuring everything that's important.
Well, and that's why Robert's really good at what he does in working with seasoned professionals, because truly it's because you know that as part of your team you select good lenders and good title companies to work with you, because truthfully we don't know everything about your contract, and there's no way that you could know everything about title insurance. So one of the things that I do when I work in a team with my realtors is I'm also basically 1-800 dial a nerd. You can call me and ask me questions. The only thing I cannot give you is legal advice, but as far as answering questions, absolutely. If you have a question about what does this mean, why is this not covered, why did you put this on my document, I don't understand, you can call me at any time as part of your team.
You know, there's something else you mentioned earlier that I hadn't even thought about. I'm actually going to be dealing with this myself, so kind of take advantage of the opportunity to have you on camera.
On camera, yay!
So you mentioned that there's a time period where most properties went under contract maybe in a different situation. So we have
Yes.
joint tenancy, we have tenancy in common.
Yes.
What did you say time period wise where most properties were actually tenants in common?
All right, so there's been a lot more education out there for the consumers. So joint tenancy means right of survivorship. So if someone passes away in joint tenancy, say a husband and wife, the title will pass to the spouse if they're in joint tenancy only by recording a death certificate, basically just to prove. So it's called right of survivorship. Then there's tenancy in common, which is where you own equal and separate interests to the property. It could be divided up 6 different ways, 10 different ways. Usually it's just a husband and wife again, but they each own a 50% share. And so what happens is, prior to about 1985, most people took title in tenants in common. They assume they're in joint tenancy and they're not. So when one of their partners passes away and then they think that everything's good, oh, I can go ahead and sell my house. They find out, in fact, it's tenants in common, and they have to do an estate for 50% of the estate. They have to actually do probate.
So I'm dealing with that in a roundabout way. My mom passed away.
Yep.
She's still on the title. I think it said my dad and my mom's name. And I've got to see if it was, I think it was tenants in common, but it's a mess. We've
Yeah.
got to get it fixed. So you have, one of the nice things is, like you said, we don't know everything, but we know people who do know everything.
Right.
So in this case, I'll have to get a real estate attorney and get that worked out. And you have all those resources. You
I
know
do.
people who you know are going to get the job done, and not just, say they're a real estate attorney, charge you a lot of money and for things they didn't need to do. Or
Well, typically what happens when we see that there is an estate situation is I pull what's called an ownership and encumbrance report. I share that with your realtor. It shows who owns it and how much do you owe against it. If I know that it's an estate situation, I pull back in the deeds all the way back to when they first bought, because sometimes when you see people who've been in the property for a while, they're going to do several quitclaim deeds, which I don't recommend, by the way. But sometimes you will see that. So we're already alerted before Robert would ever even take the listing that we've got some issues that we might need to work with. And then, yes, I do have a variety of attorneys that I recommend and that also that he can work with that are from very budget conscious to top of the line. And each situation is just a little bit different. So that's where you've got to do some prep work if you know you've got one of those kind of transactions.
Yeah, I agree. You just can't assume that because the realtor listed it, it's in the MLS, we have a contract, that it's going to be something that can actually close. And it does happen that things weren't done at the very beginning by the realtor,
Yep.
or you're relying on the title company to pull the O&E.
Yep.
And yeah, that happens.
And one of the things when we talk about the O&E, it is like the first thing that most realtors do before they list a property. It tells them preliminary information about the transaction, who really owns it, who should sign the paperwork for the listing agreement, and then any debts owed against it. But it also alerts us if potentially there could be something that we need to know about. So then that way when we come to the listing appointment, we can ask.
Right.
Or if it's an estate, well, are we going to have to do some curative things here to get it ready so we can sell? And the biggest risk is assuming because there's a will on the property that you're ready to sell. Oftentimes you're not.
You mentioned earlier, I've had clients who their parents passed off the house, did a quitclaim deed. What happens with some of those? Where's the problem come up with that?
Usually what happens is because what we just mentioned earlier about deeds being in tenants in common. So oftentimes, I hate to say this, gentlemen, but the woman outlives the man. And what happens is, say the husband died 15 years before. Then mom lives in the house and she passes away. And then the kids are like, oh, we've got to sell mom and dad's house. Well, we had a will. I think we're good to go. Mom took care of the will, and we're good to go. And then you find out mom and dad were in tenants in common. So then you have 50% of dad's estate, 50% of mom's estate. What I've seen happen is mom left a will to one kid and left all the other kids out, and then dad's half of the estate hasn't been decided. So then the other siblings jump on that. So just know there are so many moving parts with an estate. You never know for sure what you're going to encounter.
I hear this a lot because I work with a lot of people who maybe started the process as a buy owner, trying to sell their homes themselves, and they just assume they can fill out the contract, print it off the state computers and our state system, and they don't realize all the things that they have to coordinate beyond just filling up the boxes.
One of the things I was going to say too is a lot of times people will do it yourself estates. So they will actually go to the courthouse, they'll get their letters, they'll be appointed as personal representative, and then they deed the property to themselves. Number one, when they do that, that alerts additional requirements for a title company, because we get nervous about unclaimed heirs because there was no attorney involved, so you're going to have to go to court anyway. And the second thing is that you also have tax ramifications. So when you're making that step thinking, oh, this is the best thing ever, actually if you deed out of the estate to the next person, there's different capital gains taxes that are there. So that's why you have to talk to a CPA before you ever take PR responsibilities.
Okay. So, you mentioned something as far as recording. And I actually had some properties that were passed down through the family. And they said, oh, we had this recorded, so we know it's good. We'll go back to the county, we'll get a copy of it. And one of the title reps I was working with said, they'll record a napkin. The county doesn't care what it is, they're going to record it. Does it mean, if it's recorded, does it mean it's legal, legitimate, official?
Well, I will tell you that if the deed is recorded, or not recorded, but if it's executed and notarized and you left it in a drawer for 3 years, it is a valid deed. So recording just gives us public notice that something is out there for others to see. That's part of why you need title insurance, because sometimes when people close on a property, there's an unknown deed. And somebody pulls it out of a drawer and says, I have a valid deed, and it is valid, and they can assert ownership, and that's why you have title insurance to protect you.
That's why I'm glad you brought that up, because that is the point. They think just because it's recorded, everything's good to go, but it's not. There was a lot of issues with that. So what sets you guys apart? There's a lot of title companies out there. I've worked with a number of different companies, sometimes good experiences, sometimes bad. You've got a lot of experience, and you've worked with a number of companies, so you've on every side of the title process. What separates you? What makes it special now, this new relationship?
Well, a couple of things about Equitable Title that I think makes us superior in working with your HomeSmart agents is that, number one, we have integration behind the scenes. So we're going to be able to keep track of who's doing what on a transaction. With a traditional title company outside that you would be going to, you have to call, you get left on voicemail, you got to wait for an answer. It's instant access to your partners. Number two, because we are right next door to HomeSmart, we offer fiercely competitive rates. So there is a website out there called www.comparetitlecompanies.com. I actually encourage every consumer to go on there and shop their rates.
Great advice.
See what's out there. And it is a side-by-side comparison based on the filed rates. There's no monkey business. You're not on that site unless it's actually your rates filed with the Division of Insurance. And so our title company actually offers what's called a 6-year 50% reissue rate. What that means is if you've refinanced or purchased within the last 6 years, you get a 50% discount. It doesn't matter which title company, you'll get a 50% break.
And that is pretty incredible, because I think typically what I've found for most other companies is the first year or two, there may be 50%. Usually it's the first year. Then the second and third year, they might do a 30%. And after that, it's full rate. So when we're working with people, they're always, like everything, they want us to give them the best rate we can give them, cut our commissions here and there. And what I point out is there's so many other pieces of the puzzle that we're going to save you money on or make you more money on, and that's a big one. If you're saving $1,000 on title insurance, you're not even calculating that. That's one of those little fees, kind of like a lender fee, that you just don't realize that you could have saved. So that's huge.
And as a consumer, you have a right to shop. The other thing about our title policy is that we are underwritten by Attorney's Title Guarantee. So what that means is you have a title agency that performs all the functions, does the search, and does the closing. But once it's closed, the underwriter is who pays claims, fights in your defense if anything should come up. So Attorney's Title Guarantee is our underwriter. They have an A+ superior rating on a national basis. Our legal counsel is here. So if you have a claim to submit, we are right here in Colorado and we can handle it. You're not dialing 1-800 California, help me. So that is really, really super important if you have issues here.
And what was the website you said to compare again?
There is a website, one to compare rates, which is www.comparetitlecompanies.com.
That's the one that's important, yeah.
And then there's also one called www.demotech.com, which compares underwriter strength and stability.
Okay, good. So I'm going to throw one at you. We didn't talk about this, but
Okay.
so let's say you've got an investor. I don't know what your answer is going to be, so I apologize if I threw. And there's a thing they would refer to as holding a title open because they're
Yes.
going to resell it, they're going to flip it. Is that something you can coordinate?
Yes.
Great.
So what that means is significant savings to the consumer. So when you actually are doing a fix and flip on a property, what happens is you pay a small fee up front, then you have a year to go ahead and sell the property, and we turn around and don't actually hand you a title policy. We hold it open, and then when the next person comes to buy the property, we in turn give it to them. And it's at a deeply discounted rate. You're talking hundreds of dollars off. You just have to complete the flip within a year.
So again, these are little things that people don't realize that are out there unless someone tells them or they've been through it. So I appreciate that you throw one you're
Yeah.
in there. A couple others I would ask you about. You don't
He's
have to go
testing
along.
me.
I am, just to prove that 27 years are almost experience there. So what about FERPA?
Oh,
I
yes.
happen to be dealing with a lot of foreign owners who maybe purchased in the last year or two. Now they want to upgrade. The market's gone great. Now they're ready to upgrade. What might happen to them if they don't have all the legal documents in line? Not that they're illegal,
Yeah.
but just that may not be aware of tax consequences.
Well, a couple of things on tax consequences with FERPA. That just stands for Foreign Investment Real Estate Property Tax Act. And FERPA, it's a mouthful.
Yeah.
There's some factors if you are not a United States citizen. And I actually have a check sheet that we have available for our agents that they can send about yes or no if you are, I guess, obligated to pay those tax burdens. So there are a couple of rules of thumb to keep in mind about FERPA. One of them is if the sales price is under $300,000 and you, the buyer, are going to own or occupy the property, then the seller does not have to pay the FERPA taxes. So a lot of people don't know that they have to pay the 10% or the 15%. If in fact the sales price is $300,000 to $1 million, it's 10%. Over $1 million, it's 15%. And the documentation that's provided, I actually have a list of it because there's so many different variances to what qualifies you as a United States citizen or a legal resident versus not, that those are pulled directly from the IRS. So you do need to consult a CPA on FERPA issues. The big thing to know is that as a buyer, when you buy, if you buy a house from a non-US citizen, that you could potentially have to pay that tax burden if it's not collected at closing. The responsibility is not on the title company. The seller actually has to sign an affidavit and prove that they're a citizen of the United States.
It's really a crazy deal. The seller's the one who may owe it. The buyer is potentially the one who may
Has
pay
to
it.
pay it.
So yeah, it's a crazy deal. So that's a good one to people know that this is something we take hour, 2 hour
yeah.
classes on. So we're not going to cover that now, but
I got a flyer for you.
yeah.
Yeah.
The key is we have an expert who can help us point to other experts.
Yep.
One other one. You do 1031 exchanges.
Yes.
So for
Well,
investors.
yeah.
So you have that capacity,
Yes.
and it's always like a second-hand party
Yes.
that actually does it.
Yeah.
No matter who the title company is.
Correct.
It's always another party. So how does that work?
Well, I work with my favorite 1031 exchange provider is IPX, Tracy Wilson and Danita Vigil. I've actually known both of them for almost as long as I've been in the title business, and they work for one of the largest 1031 exchange companies in the nation. So they can do not only international exchanges, but they can also do multi-state exchanges, reverse exchanges, and forward exchanges. So the way that works is if you are an investor and you're selling a second property and you don't want to pay capital gains tax, you alert your realtor and you alert the title company that you would want to do a 1031 exchange. You can actually wait until closing table to do it, although that's not ideal.
That's smart, yeah.
But as long as the funds have not left and gotten into your account, you can still do a 1031 exchange so that you're not having to pay the capital gains tax on it.
And that's something that, I've dealt with people who maybe they inherited a property,
Yep.
they rented it to family, they didn't even think about it, they go to sell, they think all that money's there, they
Yep.
may get a huge tax burden if they don't handle that properly
Oh, yeah.
down the road.
Yeah.
Definitely.
Definitely need your CPA.
That's right. Definitely need that. So I appreciate all the time. You weren't expecting to have an
It's
hour-long
okay.
conversation with me, but it's something that I wanted to share with our customers and clients. So right now we have, how many offices? We just opened 2 more offices with HomeSmart in
About
Colorado.
14.
So, and you can, although you have the central location, we really can close anywhere that's
Yep.
convenient, and that'll expand as we continue to expand. As offices, some of them are being remodeled and some are being opened. But the point is, we'll make it convenient.
Yeah.
You know, remotely. Sometimes people aren't even here. You just do everything via mail outs, I guess
Yeah.
you could say, over the computer. So, what about your team? I don't want people to think every time they call they're going to talk to you.
Yeah.
You're running the show. You got a lot going on. Who's in the behind the scenes to support?
Well, I would say initially I would introduce Danielle Gatto and Deborah Ward Hardy. Those are my 2 main closers that are here at the DTC location. And then Anthony Knight is my partner. I actually work as the salesperson and marketing coordinator in conjunction with HomeSmart. So if in fact you were working on a transaction, you would maybe get a greeting from me from the get-go, but then you would be dealing with my escrow team and our title department. So the list of who our examiners are, who does our farm packages, who does our O&Es is pretty long, but just know those would be the front and center people you would at least initially talk to if you're working with Robert.
Okay. So there's a lot of people, like I said, involved in this whole process. You know, it's not just a buyer and a seller that we're bringing together. And again, my motto or our tagline is, we want to be everything real estate related.
Okay.
You may be buying, you may be selling, you may be remodeling, whatever the case is. We're here before and after. So, and the same thing with you. You're title, but you have resources because of your experience in
Yes.
this market. You've been all of it here, right?
Yep.
27 years. So you know a lot of people.
Yes.
And there may be questions people have that are just real estate related, but they're not actually buying or selling. So feel free to reach out to me. We can connect you, or we can certainly give you your information. Do you want to give your information out? Do you want me
Oh
to
yeah, no, I'll give it to you. Actually, if you ever wanted to just ask a basic title question, I always encourage you first to talk to your realtor because they are the leader of our team. But if you wanted to email me, my last name is Milinkov, so it's WMILINKOV @eqescrow.com, or you can call me at 720-454-5776.
Great. So I definitely appreciate the time.
Yeah.
You've been a great person to work with. I love
Thank
the
you.
relationship, and you know, I want to have our partnership, our team that we work with, you know, available to our customers and clients. So I appreciate you taking some time out of your schedule because you're busy.
Well,
I won't keep you anymore.
I'm not too busy for him, and
Well,
I'm happy to do this.
When we started, it was snowing like crazy. Now there's almost nothing. So there's a method to my madness.
Oh yeah, see, he's got a little bit of a drive from here, so at least
Just
now
a little.
you timed it just right.
Cool. Thanks again.
Thank
Thank
you.
you.
All right.